Distinguished guests, ladies and gentlemen, great pleasure to be here. Uh, India is growing at about 7.5%, but the challenge is to make it grow at higher rates of 9 to 10% per annum, year after year, for several decades, and to lift a very young population above the poverty line. And there are a couple of things I think India needs to do for that. One is that it needs to make itself a very easy and a very simple country to work in. India had made itself a very, very complex, very complicated, very, very difficult country to work in for business to grow and flourish. And therefore, you need to dismantle a lot of rules, regulation, procedures, and acts. And that process of dismantling is presently on in Government of India. So several things we've done: import, exports. We've brought down the number of forms to be filled up from 11 and 9 to 3. You can register a company in one day. MSMEs can register in 2 minutes now. So a lot of radical changes have been done. We've tried to bring in a huge amount of competition among states as well through this ranking and trying to name and shame the states. So we rank the states now on how well they are performing on ease of doing business. And the basic thrust is that make India efficient, make it easy and simple. The second key point to my mind is that India must become a very integral part of the global supply chain. And if India is to become a very integral part of the global supply chain, then you needed to open up your economy in big ways. And we've opened up every single sector of India's economy. So we've opened up, FDI regime in defense, construction, railways, insurance, pension funds. And actually, the total FDI into India has grown by about 53%, as compared to a global decline of about 16%. We are today the number one recipient of FDI across the world. Third key thing to my mind is that we need to tap the energy, vibrancy, and dynamism of our young people. And a lot of that movement we are seeing in startups across India, not merely in the digital world, but also in health, education, social innovation, all these. And fourthly, we must understand that actually India has today become the center for global innovation. And Bangalore and Hyderabad have, in the last 4 to 5 years, had close to about 1,500 multinational corporations who've relocated their global innovation centers into Bangalore and Hyderabad, and this seems to be now spreading to Pune as well. So these are key things, but the most important of all this is that how does India use technology to leapfrog? And it'll be very difficult for India, as I said, to grow at 9 to 10%. And lift vast segments of our population above the poverty line without using technology to leapfrog. And it's only technology which will enable total factor productivity to come into India. Because at the peak of its growth, when Japan was growing post-World War II, its productivity levels were rising by about 31%. But when Korea was growing much later, its productivity levels were rising by about 42%, but when China grew, its productivity levels rose by almost 73%. So you see the difference in levels of productivity during those particular spurts of growth. But if India is to grow and really expand rapidly, because it's important to understand the difference, that if India is to grow at our per capita income is roughly about $1,580. But if India is to grow at 7%, just grow at 7% per annum, and if that is India's ambition, by 2032 we'll take our per capita income to roughly about $4,400. But if you grow at 10%, the compounding power of growth is so enormous that you'll take your per capita income to close to about $6,800. So that is the compounding power of growth. So 10%, you double your income in 7 years, and that's why it's important for us to understand this. But for that to happen, technology will be the differentiator. And if technology has to be the differentiator, then India must aim to become a totally cashless, presenceless, paperless society. Until it doesn't happen, it will be very difficult to reduce the costs of transaction and lift people above the poverty line. Because if you follow a traditional process of growth of creating brick and mortar banks in rural areas, spread credit to all of them, get people to be posted in banks, that's a very, very tardy process. And the cost of transaction will be enormously high, whereas digital transactions today enable you to radically reduce your cost of transaction. But it's also important to understand that while we are talking about this today, that non-cash transactions today are just only 22% of all consumer payments. Just 22% of all consumer payments. But nevertheless, the speed at which it is growing, it is expected to overtake cash transaction by 2023. The key challenge, of course, is that all this will happen, and that I'll come to those points, that what is it that will be the key driver of growth. Now, the current value of digital payments is just about 50 billion, but it is expected that the total payments via digital instruments by 2020 will cross about 500 billion. Now, the current number of point-of-sale terminals in India is only 1.2 million, just 1.2 million. But we've taken several measures and very radical measures to push the limits of digital payments, to provide impetus to digital payments. The country is, over the last several years, if you look at the last 45 years history, we've had just about 12 bank licenses issued, but in the last 1 year, we've issued about 23 bank licenses. We've issued licenses to 11 entities for payment banks. I think the biggest radical departure has been the universal payments interface. It's a very, one of the officers that made me try this, it's an extremely seamless, interoperable and universal payments interface which has been launched. And I think this will be a very, very key driver. It's radical in its approach. We've had a KYC relaxation on transactions up to 10,000 per month on prepaid instruments. We've had exemption from two-factor authentication in case of wallet transactions. The Aadhaar linking has made KYC much more easier and faster. And today, the Bharat Bill payment system allows multiple payment modes at merchants' POS. But there are also several barriers for consumers to become digital citizens, and I think Indians, because we are a very young society, and 72% of Indians are less than the age of 32, and because, to my mind, the biggest transition taking place across the world is in terms of social demographics, that Indians are getting younger and younger and will keep getting younger till 2040, whereas the Western world will keep getting older and older. And this is the biggest social economic transition that is taking place. It's the biggest social and economic phenomenon that's taking place across the world. And since young people are able to adapt to the digital world in a much quicker, much faster manner, it's important to break the barriers for consumers to adopt to the digital world. And I think we need to push the limits on this habit of using cash. This habit of using cash must move away. The complexity of digital payment instruments, payment gateway pages not available in regional languages, and the spread of regional languages is very, very important. And it's good to see many, many young startups doing some remarkable work in this field. I don't know how many of you have heard of this Reverie Technologies, which is able to translate, transliterate, and actually provide search engines all in 14 different Indian languages. So those are major things. Payment gateway pages being made available in regional languages. There are complexities about remembering login, passwords, etc. But the biggest challenge is about the limited reach. There are challenges about hidden charges, fraud risks, trust issues. All this we need to tackle. But I think the biggest game changer in all this essentially has to be a very, very rapid spread of internet. Nothing is going to transform India other than the spread of internet in a very rapid and fast manner. And this, if you look at China, in the last 5 years, their e-commerce has grown by about 600%. 600%. Alibaba started in 1999, but today it's a company with, its valuation is 200 billion. 200 billion is its valuation in a very short period. I mean, it's done some very unique things. So there's Alipay payment mechanism, etc., where they hold the money in an escrow account till the goods are not delivered, is a remarkable innovation. And therefore, as we go along, a lot of innovation is required. But I think the biggest game changer has to be the spread of internet in a very rapid, quick, fast manner. And towards that, I think the key will be the right of, we've had one disruption through this coming in of Reliance Jio right now, but I think the big disruption will have to happen through the right-of-way policy, which should get announced quite shortly. And this right-of-way policy is important because many states, many municipalities at the field level are posing immense problem on laying fiber. Unless and until we allow private sector to lay fiber and spread fiber in a very big way, it'll be very difficult to make this distinction. In the long run, good connectivity, very robust connectivity will come in from the spread of very good fiber under the ground, and therefore right-of-way policy, to my mind, is a very, very key challenge. But the BharatNet, which was held up for some time, since I'm a member of the Telecom Commission, I can tell you a lot of headway has been made. It's not that we've got pipes, we've got fiber below, but the supplier of Geopon on either side, the instrument on either side, which has to make it live, one supplier would bid on L1 several years back, had miserably failed to supply those prices. And that's how India is. India has become obsessed quite often, even in technological fields, on the lowest cost. And that's why this L1 supplier 4 years back has miserably failed to supply. And therefore, I think it's also a case for arguing that India should not work on the lowest cost in this country. We should disrupt this model of lowest cost also. We should devise a system of quality come cost, which we do in several areas. So now that has all been sorted out. We've now got 4 suppliers, so things will move very rapidly. But I think the other thing which Government of India is planning is to spread it much more rapidly by adopting what has been done in Andhra Pradesh, using power lines to spread connectivity. And in second phase, several areas will be spread through that. So, the important thing is that there are several game changers. And the game changer really are many, one of which is the rapid spread of Digital India program. It's also the rapid spread of Universal Payments Interface of NCPI. I was told that Ajesh had earlier spoken about allowing the market to compete. I'm all for it, but I think UPI is still in its very initial stages. I think we should allow that to settle down for some time, let all the banks get interconnected. And in the subsequent phases, yes, of course, there needs to be, I'm a great believer in market, and therefore you should have competition in the second phase. I think the third big game changer is, of course, the JAM Trinity, which is important, and therefore Digital India program, UPI, JAM Trinity, and I think fourthly, the expansion in physical points of sale. That is, we have only 1.2 point of sale terminals in India, and we need to take it to about 20 million in the next 2 years, from 1.2 to 20 million, and actually every Kirana store needs to have point of sale terminals. Without this, this will not happen. And I've already talked about internet and smartphone penetration. We are a country with 1 billion mobile. We're the only country with 1 billion biometrics. No country in the world has that. And I'm extremely confident that by 2024, we'll be a country with 1 billion smartphones. So all the innovation, all the payments, everything will actually happen through smartphones. And that's why when I say that Our e-commerce, India's e-commerce is just about 20 billion right now. But by 2025, I expect it to be about a $250 to $280 billion business. Actually, my view is that brick and mortars will find it very difficult to compete against e-commerce as we spread internet very rapidly and as the mobile telephony and smartphone spreads very rapidly. So internet and smartphone penetration. And lastly, the huge focus which government is laying on DBT, that is using across all government schemes, from scholarships to foods to LPG. We're just doing this experiment on DBT on supply of fertilizer in 16 districts of India. We're doing another one on, we're actually doing it right now live in Krishna and Godavari districts of Andhra Pradesh, but we want to spread it to other districts. So as the Digital India program spreads, as universal payments spreads, as Jam Trinity expands, as there's expansion in physical points of sale, which we need to take from 1.2 million to 20 million, as internet and smartphone penetration spreads, and as DBT spreads across, you will see growth, you will see opportunities, and you'll see a huge inclusion. The only way for India to have accelerated growth is through digital payments. The only way you can have inclusive growth is through accelerated growth with inclusive growth, is to have digital payments. And India's target should be really that it needs to become the first country, disrupt a lot of technologies to become a cashless, presenceless, and a paperless society. Our target should be that by 2025, every single transaction must be a digital transaction. Thank you very much, ladies and gentlemen.